Okay, some of you all might have seen my blog before, I hope. So during this time, I recorded my trades, and I realized that over time, right, I had a lot of audiences, not just from within the school, but from the public as well. Okay, so currently my blog has almost 1.5 million visitors, and we actually started a Facebook page as well, and there's probably about more than 11,000 fans currently, right? So you all should definitely go and check it out. Okay, so over time, I actually got requests to come and help new traders as well, because people were interested in what I was doing, right, in what I was blogging about, and they wanted to learn from me, right? So over time, I actually started out my own company, my own training company to help train new traders. So this is some of the the journey that I went through, right? I actually attended some conferences, got invited to speak at different societies, right, at the banks or at the brokerages. And something more interesting, I actually got to have lunch with Jim Rogers, right, during one of the events. And he's actually a pretty entertaining personality, right, a very knowledgeable investor as well, right. So it's good that I got to talk to him. Okay, and I also got interviewed by SGX Business Times, and I also wrote a couple of articles for the Shares Investment magazine, right, one of the most popular magazines in Singapore on investments. Okay, but enough boring you about my life. Okay, so moving on to, I'm actually about to share three of the most important lessons that I've got, right, throughout the years of trading, right. And the first lesson is actually to follow your heart, right. Just last night I was watching the Steve Jobs movie, right, and I found it very inspirational, right. How many of you have caught the movie? Okay, not that many. Okay, those of you who haven't seen it, right, after this, right, you should actually go and check it out before it ends, right. It's a very inspirational movie because, I'm looking at him, right, he actually doesn't, he actually really follows his passions, right, no matter what, what the cost, right, or what the price to pay, and then, that's how he actually managed to develop such great products, right. Okay, so, when I talk to my friends, right, who are working, right, the typical 9-to-5 jobs, right, it's interesting that, when I talk to them, the first thing that they want to do is actually to complain to me about how much they hate their job, right? No one you talk to, seldom you see people say that, I love my job, right? I always go to the office at 7 a.m. before anyone. So most people don't like their job. And the funny thing is that Singaporeans work one of the longest hours in the world, right? And there are even extreme cases, right? Some of you might have seen this recently, right? That the intern worked himself to death, right? So if people don't like their work so much, right, why do they still work such incredibly long hours? Okay, I've done a simple breakdown of a typical day of a week of a person, right? So you see, working actually takes the bulk of the time, right? Followed by sleeping, daily necessities like say traveling, eating, right? These are daily necessities, and you find that there's actually very little time left, right, for doing the things you want. And most of the time, if you spend it on Facebook watching television, then that time probably just disappears, right? So if you're going to spend so much time working, right, it makes sense to find something that you actually enjoy doing, right? Does that make sense? Okay, so so this is actually what I chose as if you have read the synopsis of my talk, right, I actually posted this question, right? If money was not an issue, right, what would you really like to do? Right, so it's just something that I was thinking about, right, back then a couple of years ago when I was still in school, right. If I look at myself in the next 5 years, right, where what do I want to be doing, right? And talking to my seniors, I realized that most of them are so unhappy with their jobs, right. So I was thinking, in 5 years, I won't want to be sitting in that position with a boring job every day and doing something that I don't like, right. So I thought, why not do something that I like, right, which was trading, right. So I pose the same question to you, right, if you haven't thought about it, right. If money was not an issue, what would you like to do, right? Would you like to spend more time with your loved ones, travel the world, right, start your own business, right, or get a different job, right? Let me ask you, if today I was to offer you your dream job, the job which you really want to do, right, but at half the pay, right, how many of you would take the job? Okay, so many of you are not being honest with yourselves here. Okay, the truth is that many people still will not take their dream job, right? Because, financially, they still have to think about the money, right? Because money is still something that, is a major concern to most of us, right? So that brings me to my next point, which is to be Okay, which is to be financially savvy, right? We don't have to be like, a super guru like Jim Rogers or Warren Buffett, right, or George Soros, right? But we at least need to have a certain level of financial savviness, right, to know, to plan for our own finances and to at least cater for the rest of our lives, right? So let me share with you this quote, right? It says that having money isn't everything, but not having it is, right? The gist of it is that, if I have a lot of money, right, I won't be thinking about money all the time. I'll be thinking about, how to spend my time, how can I use this money, right? What can I do with my life, right? However, if you don't have money, right, forever you'll be thinking, how am I going to pay the next bills, right? How am I going to afford this? How am I going to afford that, right? So that's what I mean by, if you don't have money, then money will constantly be on your mind, right? So if you are financially savvy, right, you don't have to worry about money. You can think about the other more important things in life. Okay, so the bottom line is that, the bottom line is that financial stability gives us choices in life. Right, this is the bottom line. Okay, so how do we actually go about doing this? Okay, so we actually created this 3 streams of income model, right, where we actually have 3 piles of cash over here, right? As you can see, there's job, trading, and passive, right? So normally we start off, right, for most of us who are working, right, we'll have the bulk of our income will actually come from our job income, right? And for those of you who trade, right, or some other source of income, the second smaller pile will be that income, and then the passive income, right, will be your fixed deposits, your investments, or your stocks, right? So something that doesn't require much time. That will be your passive income, right? So this is typically 3 streams of income, and if you look at the job and trading income, right, these are classified as active income, meaning you need to actively spend your time to earn the income. Right, while passive income, you don't have to do anything and it comes to you, right? So the idea of building up financial stability, right, if you ask anyone, is actually basically to reduce your job income and trading income and slowly build on, building the passive income, right? The passive income is what brings us the stability, right? So to do this, I have actually there are 2 different options which you can do it. Okay, the first option, right, is actually to work and save hard, right? This is a very standard mentality, meaning we ignore the trading income, we ignore the business income, right? We just focus on our job, we save hard, and we invest the money in the bank, right? So, recently there's been an article in the Straits Times, right, where they asked, how long does it take someone to save $100,000, right? And the answer they gave, right, and they were using data from a fresh graduate, and the answer was that it took the fresh graduate 5 years to save $100,000. Right, $100,000, right, if we are able to get, say, a 10% return, right, that is typically about $10,000 a year, which adds up to less than $1,000 a month, right? So that is definitely not enough for us to retire, right? If you're talking about retirement or, financial stability, $100,000 is not enough, right? So for me, typically, I think that having $1 million is a comfortable, right, and a conservative sum, right, if you're talking about retirement. Right, so if it takes you 5 years to save $100,000, right, saving $1 million will merely take you 50 years, right? But to me, that's a pretty long time. So that's why the other option is actually to have another source of income, right? Whether it's through trading or through business, right? And then you generate, you use that income, right, to help fund your passive income and grow it as well. Right, so this actually creates a multiplier effect because now you're having multiple streams of income that are used to build your passive income, right, as opposed to just saving alone, right? Because trading also helps to generate income, right? So at the end of the day, what you are looking for is actually, right, to totally eliminate your job income, your trading income, right, and to totally rely on passive income, right? So that is something that I'm working towards too, and I'm glad to say that after 5 years of walking down this path, I more or less already have sufficient passive income to have the choice not to work. Okay, so now actually, besides just doing my own trading, I actually also started this company to help new traders, right? Whether they want to learn forex trading or they want to learn how to invest in the stock market, right? That is my main, that's what I help them to do now. And the main idea is basically to help them generate this same level of financial stability that we're talking about. Okay, so actually some of the people that I have actually previously mentored, right? So, for example, one of my students actually just, was working in the bank, right? And after he attained a certain level of skills, right, he decided to quit his job to trade full time. And recently, my stockbroker as well, right? Previously he used to be my friend, right? And then I actually helped him as well. So besides trading stock, besides investing in stocks, right? Now he also recently started trading forex, right? So these are the kind of skills that we impart to give people choices, right? Whether they want to invest in stocks or trade forex. Okay, so the third lesson, right, is actually, of course, right, to be able to achieve all this, right, the main thing that we need is competency, right? Because without competency, you don't know what you are doing, right? That definitely you won't be able to do it. Okay, so if you notice our tagline over here, right, mind over markets, right? So our tagline actually, from there we actually derive these 3 M's of success, right? Success in the markets, right? These are the 3 main factors that that are crucial to all success, right? So first one, right, is actually the mind, right? The mind refers to adopting the correct mindset, right? Which is what previously we just saw, right? The systematic way of thinking and a systematic way of building wealth, right? That's the correct mindset. And the second is markets, right? Which is understanding how the market works, right? And it's important to understand the market is not just from a financial perspective, but from a psychological and behavioral perspective, right? And thirdly is effective management, right? This is where you actually prevent the downside, right? Because trading and investing is a risky activity, right? So you need to have certain rules to help you protect the downside, right? So we'll actually be talking about 2 and 3, right, in the coming slides. Okay, so when we talk about the markets, right, what actually moves the markets, right? Because there are many things that happen in the market, right? Like say the news, or someone buying, someone selling, right? The big players, right? The financial reports, the charts, right? So at the end of the day, right, people who are new get very confused because there are simply too many things to consider in the market, right? But if you look at, if you boil it down to the market, right, it actually, for those of you who have done economics, right, this is a simple supply and demand graph, right? In essence, right, when there's more demand than supply, right, what happens to prices? Prices go up, right? And if there's more supply than demand, prices go down, right? So actually this is basically the gist of how the market works, right? If there are more people buying, prices are going to go up. More people selling, prices are going to go down, right? So that's the main idea behind how the market moves. Okay, but the main idea, right, is, so what, this brings us to the next question, right? What actually drives this supply and demand in the market, right? Because the market is actually not, it's not random numbers, right? It's not random charts. It's not analyst reports, right? The market is actually made up of people, right? Human beings like you and me, right? Who transact every day in the market, right? So this supply and demand is actually determined by their actions, their behavior, right? Which is driven by their emotions, right? So it makes sense that if we want to see, right, how the prices are going to move, right, we should move to the source, right, which is to analyze the behavior of the people, right, how they are reacting in the market, how they are thinking in the market, right. This is what is ultimately going to drive the supply and demand, right, which is going to drive, right, the changes in the prices in the market, right. So this is a typical cycle of how behavior, emotions, right, can affect the market. Okay, let's look at a real example, right, the Straits Times Index, right. For those of you who have traded or invested in the Singapore market, right, you know that the Straits Times Index is the main, the main benchmark for the Singapore market, right? So you can see that the parts that I've highlighted in the red box, right? This, if you are a long-term investor, right, this is where you will be looking at, right, for the major turning points, right, where you want to invest at the low point, right, and get out when the market is toppish, right? So these are the red boxes where a long-term investor will look out for, right? But if say you're a shorter-term swing trader, right, you'll be looking out for these blue circles, right? These are the smaller price fluctuations which you can take opportunity of as well, right? So this is how if we relate it to the previous slide, right? How the behavior and the emotions actually drive the cycles in the market. Okay, so for most of you, right, I believe that you might have heard stories, right, of a family member or a close friend, right, who has perhaps lost money in the market, right? So they tell you, or maybe your parents have told you, right, don't ever invest or don't ever trade in the stock markets because you will lose everything, right? Actually, my parents told me that at the start, right? But if you think about it, right, I've seen road accidents as well. I've seen people who drive a car and crash the car, right? So, but that doesn't stop me totally from driving a car, right? So what is the main difference here? What's the point that I'm driving at, right? The main difference, right, is that, is how, it's not that, every activity, right, carries a certain amount of risk, right? But how well you manage the risk, right, depends, will determine how risky the activity is, right? See, if you look at trading, right, there are people who succeed, there are people who fail, right? But for those who succeed, what is the one biggest difference, right, between the people who succeed and the people who fail, right? The people who succeed, basically, right, firstly, they have a vision, they have a plan, right? They know what they are doing, they are competent, right? So that is the biggest difference. You're competent, right? It actually effectively reduces the risk, right, to almost zero, right? If you think about it, right, something like flying an aeroplane is extremely risky, right? But if the pilot is competent enough, right, he's able to minimize the risk, right? So you don't see aeroplane crashes that often. Okay, the thing is, because people who enter the stock market, right, they think that, they read a book or two, they become as competent as a pilot to fly an aeroplane, right? But that's definitely not true, right? So before I end off, right, I would like to just conclude with, right, the 30-day challenge. Okay, so my 30-day challenge is actually very simple, right? Just go and read my blog, right? I just challenge you to follow my blog for the next 30 days, right? Because I actually have the personal blog which I was telling you about, right? So every day I make it a point, right, to post something new, to share something new, right? So I believe that, if you follow my blog for 30 days, you will get a really good idea of what I'm talking about, right? So if you have any questions, I'll leave you with this challenge, right? If you have any questions, I'll be glad to take them. Thank you.